Welcome to your personalized deep dive. Today we're going back in time.
Back in time.
To December 17th, 2024. A day when the markets were really buzzing with anticipation.
Buzzing.
Picture this. You're checking that morning briefing,
Morning briefing.
coffee in hand,
Coffee.
and you're hit with this wave of mixed signals.
No way.
The Fed's about to make a decision
Big decision.
about interest rates.
Interest rates. Everybody's on edge.
So buckle up. We're diving into this pivotal moment to try to understand what was happening
Pivotal moment.
and why it mattered.
Why it mattered. It's fascinating, isn't it?
Absolutely. This wasn't just about numbers.
No.
It was about capturing that pre-decision tension, that moment where everything just hangs in the balance.
Eames in the balance.
Yeah, it was a day where tech just seemed to be writing its own rules,
Absolutely.
while other sectors were grappling with uncertainty.
Right.
The closing bell rang, and the S&P 500, it eked out a small gain,
Small game.
while the Dow Jones dipped just slightly. But over in the tech-heavy Nasdaq, it was a different story altogether.
Different story.
A solid gain, mirroring the optimism of the Russell 2000.
That divergence is key, wouldn't you say?
Yeah.
Tech just defying gravity, while more traditional industries were sending out distress signals.
Interesting.
Really speaks volumes about where investor confidence was at that moment.
It's like we were watching two different economies unfold simultaneously.
Too different.
And then, of course, there's the crypto world, which was adding its own layer of complexity to the mix.
Oh, yes, always.
Bitcoin was on a tear, breaking through the $100,000 ceiling once again to hit $107,014.
Wow.
And even Ethereum saw some modest gains.
That Bitcoin surge, that wasn't just a fluke.
No.
It was a reflection of this growing acceptance, particularly by institutional investors.
Right.
More and more companies were finding real-world applications for blockchain technology, and Bitcoin was reaping the benefits.
It was starting to shed its image as this volatile, speculative asset and morph into something more well-respectable.
Exactly. And that shift in perception was crucial. As Bitcoin gained legitimacy, it started attracting a different breed of investor.
Interesting.
They won with deeper pockets and a longer-term outlook.
Okay, let's unpack this tech versus tradition tug of war a bit further.
Okay.
The Nasdaq's success wasn't just about a general sense of optimism.
No.
Major tech companies were releasing earnings reports.
Right.
That blew expectations out of the water,
Totally.
showing real growth even as the global economy was sending out those mixed signals we talked about.
That's what makes it so remarkable.
Yeah.
These companies weren't just surviving, they were thriving
Right.
in an environment where others were struggling to stay afloat. And if you dig deeper into the morning briefing,
Yeah.
you'll find that a lot of this had to do with their aggressive investments in AI and their ability to pivot quickly to
Interesting.
meet changing demands.
They were almost operating in a different dimension, weren't they?
In a way, yes. They were capitalizing on the very trends that were creating uncertainty for other sectors.
Yeah.
For example, the rise of remote work and the accelerated adoption of digital tools played right into the hands of companies that were already positioned to provide those solutions.
And on the flip side, we had the Dow, which was weighed down by concerns about manufacturing and industrial sectors.
Yes.
Still wrestling with those pesky supply chain disruptions.
Supply chain issues.
These weren't new problems in 2024, right?
No.
They'd been brewing for a while.
They had been building for some time.
Yeah.
And their effects were lingering.
Yeah.
Creating this undercurrent of anxiety among investors who weren't sure if those industries could adapt as quickly as tech was.
So it was like tech had this agility, this built-in shock absorber.
Yeah.
While those traditional sectors were still trying to figure out how to navigate this new terrain.
It's a great analogy.
Yeah.
Tech had embraced disruption as a way of life, while other sectors were still trying to catch up. And that's a key takeaway for any investor, wouldn't you say?
Yeah.
The ability to adapt is paramount in a rapidly changing world.
Couldn't agree more. Now let's circle back to Bitcoin for a moment.
Back to Bitcoin.
Remember that surge we talked about?
Yes.
Well, a lot of that momentum was fueled by the growing institutional interest we mentioned earlier. But it wasn't just about big players jumping on the bandwagon.
Right.
It was about the underlying technology, blockchain, gaining traction in the business world.
That's the crucial point. As more companies found practical applications for blockchain, it lent credibility to the entire crypto space.
Yeah.
Bitcoin, being the most well-known cryptocurrency, naturally benefited from that rising tide.
And what about Ethereum?
Ethereum.
It was also enjoying gains, though not as dramatic as Bitcoin's.
Yep.
Was that also tied to blockchain's growing acceptance?
Absolutely. Ethereum, with its focus on decentralized applications, was attracting a different kind of investor.
Yeah.
One interested in the potential of this technology to revolutionize industries, from finance to healthcare.
So both Bitcoin and Ethereum were riding the wave of blockchain adoption.
Yes.
But they were also carving out their own niches within the market.
Precisely. And that speaks to the breadth of the blockchain revolution.
Yeah.
It wasn't just about a single asset or application.
Right.
It was about a fundamental shift in how we think about value, trust, and decentralization.
That's what makes it so fascinating.
Obviously.
Right? This wasn't just a financial story.
No.
It was a technological and cultural story unfolding in real time.
Exactly. And that brings us to the heart of the matter.
Yeah.
The Federal Reserve's looming decision on interest rates.
Uh-huh.
This was the wild card that had everyone on edge.
Right.
And it was already sending ripples through the markets, especially in the energy sector.
The energy sector. Okay.
Yes.
You mentioned ripples in the energy sector.
Yeah.
What were we seeing there on this particular December day?
Oil prices took a tumble for the second day in a row.
Mm-hmm.
And that was a direct reaction to the anticipation surrounding the Fed's decision.
Right.
If the Fed raised interest rates, it could potentially slow down economic growth, which typically translates to less demand for oil.
So it's like the oil market was holding its breath, waiting to see which way the Fed would jump.
Precisely. Oil prices often serve as a barometer for the overall health of the economy.
Right.
And at this particular moment, they were reflecting the uncertainty and anxiety that was gripping the markets.
And to add even more drama to this, there was a CNBC survey circulating that suggested a rate cut was actually the more likely scenario.
Interesting.
But the catch was, economists were fiercely debating the timing and the potential effectiveness of such a move. Talk about a nail-biter.
The Fed was in a tough spot.
Yeah.
They were trying to strike a delicate balance, stimulate economic growth while keeping inflation under control. Raising rates could help with inflation, but might risk stifling growth. It was a classic economic dilemma.
And speaking of dilemmas, some investors were getting pretty creative with their strategies.
Yeah.
The morning briefing mentioned something called rate-hedged bond funds.
Yes.
What exactly are those, and why were investors suddenly interested in them?
Rate-hedged bond funds are designed to perform well, even if interest rates go up.
Right.
Typically, when interest rates rise, bond prices fall,
Right.
and investors can lose money.
Yeah.
But these special funds use hedging strategies to offset those potential losses.
So it's like they were hedging their bets, saying, look, we don't know which way the Fed's going to go, but we're going to be prepared for either outcome.
Exactly. It showed a level of sophistication among investors.
Right.
They weren't just reacting to the headlines. They were thinking strategically and positioning themselves for different potential scenarios.
Makes sense. Okay, so the Fed had a lot to consider. I mean, their decisions have a ripple effect, not just on the U.S. economy, but on the global economy as well, right?
Absolutely. And it wasn't just about crunching numbers and looking at economic indicators, geopolitical factors, things like trade tensions and immigration policies were also part of the equation.
Interesting.
The Fed had to consider the global impact of its actions, not just the domestic ramifications.
Wow, talk about pressure.
Right.
Their every move was being scrutinized, not just by Wall Street, but by governments and businesses around the world. So let's break down how all of this was playing out across different sectors, starting with tech, which was obviously on a roll.
Yeah.
The morning briefing highlighted unprecedented growth.
Yes.
Fueled by AI and the seemingly insatiable global demand for digital solutions.
And it wasn't just about meeting existing demand.
Right.
Tech companies were actively shaping the future, pouring money into research and development, pushing the boundaries of what was possible.
They were investing heavily, even with the possibility of a rate hike looming. That's interesting.
It speaks to their confidence and the long-term potential of their innovations. They weren't just reacting to short-term market fluctuations. They were playing the long game.
So they were betting on innovation as their shield against economic uncertainty?
In a way, yes. They believed that the transformative power of their technologies would outweigh any short-term economic headwinds.
It's like they were saying, bring on the rate hikes, we've got AI on our side.
But in all seriousness, it's a testament to their belief in the future.
Okay, now let's shift gears to the energy sector.
Energy sector.
What was the story there? I remember we talked about oil prices being jittery, but there was also this global shift toward renewable energy sources happening simultaneously. How is that impacting things?
The energy sector was definitely in a period of transition marked by both volatility and opportunity.
Oh.
On the one hand, you had fluctuating oil prices reflecting uncertainty about global economic growth. On the other hand, you had this growing momentum behind renewable energy, driven by concerns about climate change and technological advancements that were making these alternative sources more viable.
So it was like two forces colliding, the old guard of fossil fuels and the rise of renewables.
It was a fascinating dynamic.
Yeah.
Traditional energy companies were facing pressure to adapt, to diversify their portfolios, to invest in cleaner technologies.
Right.
And at the same time, renewable energy companies were scaling up, rapidly attracting significant investment and vying for a bigger slice of the energy pie.
Sounds like a sector ripe with both risk and reward.
Absolutely.
And speaking of risk and reward, let's talk about the financial sector. All eyes were on those interest rates and how they might impact lending and investment strategies.
Absolutely. The finance sector was navigating a tricky landscape. Banks were walking a tightrope, trying to find that sweet spot between offering competitive rates to attract customers and managing the risks associated with a potential economic slowdown.
So they were caught between the need to keep the money flowing and the need to protect themselves from potential losses.
Exactly. And then, of course, you had investors trying to anticipate the Fed's move and adjust their portfolios accordingly. Some were playing it safe, while others were seeking opportunities in areas that were expected to benefit from a changing interest rate environment.
It's like everyone was trying to read the tea leaves, looking for clues about what the future held.
It was a time of heightened awareness where every piece of data, every utterance from the Fed was being analyzed and dissected for its potential impact.
And it wasn't just a domestic affair, right? The whole world was watching the U.S. economy, holding its breath to see what would happen next.
That's the nature of a globalized economy.
Yeah.
The U.S. plays such a pivotal role in global trade and finance that its economic policies often have a ripple effect across continents.
So what was the consensus among experts at the time? Did anyone have a crystal ball that could predict how things would unfold?
Well, if only we had a crystal ball. But seriously, there was definitely a sense of cautious optimism in the air. Analysts were wary of the short-term outlook given those mixed economic signals and the ever-present geopolitical tensions.
But what about the long term? Was there a sense that things would eventually settle down?
Yes. There was a belief that in the long run, sectors driven by innovation and adaptability, think tech, renewable energy, certain areas of finance, those were the ones expected to outperform.
So it wasn't all doom and gloom. There was a light at the end of the tunnel, but you had to be in the right lane, so to speak.
Exactly. It wasn't about betting on specific companies. It was about understanding the underlying trends that were shaping the future and positioning yourself accordingly. It was about recognizing that change is inevitable, and those who can adapt and innovate will ultimately thrive.
It sounds like December 17th, 2024 was a day where the future was being written in real time, with tech forging ahead, traditional sectors adapting, and investors just trying to make sense of it all.
It really captures that pivotal moment, doesn't it? The tension between the known and the unknown.
Yeah.
The pull of the past and the promise of the future.
And as we've explored these market movements, the Fed's looming decision and the forces shaping different sectors, what are some of the key takeaways that you would highlight for our listener?
I think one of the most striking observations is the resilience of the tech sector.
Yeah.
Even amidst global economic uncertainty, these companies were thriving, fueled by their investments in AI, their ability to adapt quickly, and their focus on meeting evolving demands.
It's like they had cracked the code of navigating disruption, turning it into an advantage rather than a liability.
Exactly. And on the other end of the spectrum, we saw more traditional industries grappling with the lingering effects of supply chain disruptions and struggling to find their footing in a rapidly changing landscape.
It's a reminder that adaptability is not just a buzzword. It's a crucial survival skill in today's world.
Couldn't agree more. And then, of course, there's the ever-present influence of the Federal Reserve. Their decisions on interest rates have a ripple effect across the entire economy. And investors were clearly on edge, trying to anticipate the Fed's next move and position themselves accordingly.
It's a reminder that we're all interconnected, whether we realize it or not. The decisions made in Washington, on Wall Street, or in Silicon Valley, They all have consequences that reach far beyond those immediate circles.
It's a complex web, and understanding those connections is essential for anyone who wants to make informed decisions, whether they're investing in the stock market or simply trying to make sense of the world around them.
So as we wrap up our deep dive into December 17th, 2024, I want to leave our listener with a final thought-provoking question. Knowing what we know now, which sectors or companies do you think were best positioned for future success back then, and why?
It's a great question to ponder. As we've discussed, it wasn't just about picking winners and losers. It was about recognizing the underlying trends, the forces that were shaping the future. And who knows, maybe this deep dive has given you a new lens through which to view the world, to spot those emerging opportunities, to understand the interconnectedness of it all.
That's what we hope for. Thanks for joining us on this journey back to December 2024. Until next time, keep exploring, keep learning, and keep asking those thought-provoking questions.